Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The US dollar index surrendered all of the post gains from the Federal Reserve rate hike on Friday, despite a better than expected US job numbers which sent the Australian dollar hurtling towards 64 cents. The US non-farm payrolls added 261,000 jobs in October, above the estimate of 197,000 gain, while the job addition for September was revised by 52,000 to 263 to 315,000, the Labour Department said. Following the job data, the US dollar plunged after changing hands from a weekly range of 113 to 110.58. At present, the Australian dollar is currently settled on the region of 65-66 cents after reinstating the bullish scenario from the technicals, and along with that, I like the way this pattern shaped up to the start of this week, so therefore should keep an eye towards that top side of the range. And this week we've got the RBA Governor Phil Lowe to speak, and along with that we've got the US CPI number, so that will probably cause a bit more of a ripple in the market. After 5 days of a roller coaster ride, the euro has managed to reclaim its top side channel, breaking through that and rallying on to 99, and now has 101 to 103 as an objective this week, as the technicals have reinstated to a bullish case. As I mentioned, the dollar plunged on Friday after the US non-farm payrolls data. So therefore, I feel that the dollar index may actually drop a little bit further down towards 109 from where it is at 110.5. The dollar yen also holding to a weaker stance to the start of this week and still looks towards the region, I feel, with a target of 145.65.80 and reassess from there. Any rebound from the bottom side of the range around 145.65 should be limited. Sterling a little bit firmer into the start of this week after last week's widely expected Bank of England rate hike, where it raised rates to 3% from 2.25. There is little economic data out of the UK. Nevertheless, the market will keep an eye on the dollar index, and especially these technicals which haven't fully supported the rally like the Australian dollar and the euro. Nevertheless, let's see if the market can reclaim that 114.5 and reassess. After the job numbers, the market surged and we got close to a Marubozu candle, and therefore the break of 1,666 has put further upside potential, that is towards 1,691 to 1,695. Any pullback? Well, I feel the market may find a little bit of support as it gets closer towards 1,667, but beneath there, the market would drop to about 1,658 before rebounding. Nevertheless, it is a strong candle, and with all the games that have been posted from the last few days of losses, should keep the bulls on track. And wrapping up with oil, the market reached its objective of $92 a barrel, but backed away from there sharply after earlier this morning there was a story that the recent relax of COVID lockdowns was actually tightened again. So the market's a little bit mixed at the start of this week. Nevertheless, as long as we hold over at the level of 89.15.45, then I feel we may see one more test of that top side before pulling back. Well, that's a wrap for the day. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.